Investors, the name of the game today is totaling our dividend income, because in today's video, as we do at the end of every month, I'm going to be revealing the dividend stocks that paid me during the month of August before tallying and totaling all of the dividend income, and then diving into my dividend tracker to ultimately show you the real power of dividend investing. Now, if you're new here, I'm Ari, your dividend investor on YouTube, sharing all the need-to-know market insights with you on top of brand new dividend stock ideas every single week so you can drive even more passive income your way. But as for today, I'm strictly keeping it to 6 stocks that paid me dividends. With that, let's dive right in. So as always, let's dive into my personal portfolio, which is currently sitting at $119,724.63 to end the month of August. Now that value actually comes after we just hit a record high above $126,000 mid-month before spiraling down after earnings season became news of the past. Am I worried? No. As a matter of fact, it's on a day like today where I actually get to see my profits regardless of the state of the market, and that keeps me steadfast on doubling down on my dividend investing strategy. Now, before I get to all the dividend stocks that paid me during the month of August, I want you to know that I'm going to give you my best in delivering through on my 2 cents on each of these stocks as to whether or not I'm going to be buying more shares, holding, or actually just selling out of some of these positions completely. After all, I'm not here to boast, but I'm trying every which way to actually teach or just share my journey with all of you so you can walk away from these videos with some more insights. And now, come the end of today's video, we're actually going to jump right into my dividend tracker so you can literally see the power of dividend investing. Now with that, how about we run back to August 1st, where we had our first couple of dividend paychecks come in, with the very first of which being Darden Restaurants, ticker symbol DRI, which is a stock that I recently mentioned in a previous video. Given it has been sliding over the course of the last couple of months, as we can see, it has peaked around $172 per share, now trading for $155 per share with a PE ratio sitting just below 20 at 19.5. Hence why I mentioned it not too long ago, and I'm going to be honest, it is one of my personal favorites when it comes to investing into the restaurant industry, specifically because it operates some of the most well-known restaurant chains in the United States, from the Olive Garden and Longhorn Steakhouse to the more famous Capital Grille and Eddie V's Seafood, all of which have proven themselves over the course of the last couple of years, even amidst all the market uncertainties. Now, I think these restaurants will likely continue to attract consumers, and in addition to that, we have a lot of analysts that are favoring Darden because they do have a very diverse portfolio. But talking about those analysts, they're coming up with a price target here of $175.94. That's about 13% worth of upside. And we may even get lucky if more downside is to come, which is likely why we're seeing some insiders selling out of the position. But here's where I actually go ahead and take that contrarian approach for the longer term win, and why I'm going to continue to hold my 5 shares, which allowed me to receive $7.08 thanks to the Darden dividend yield coming in at 3.17%. Next up, I received a dividend from the once dividend investor favored AT&T, ticker symbol T, which remains a telecom behemoth, but as I'm sure you all probably already know, it has proven itself to be, well, worthless, at least to me, which is why I actually sold out of my AT&T positions, both in and outside of my IRAs, not too long ago. And I am here without regret, as I have since reallocated all of the capital elsewhere. Now, I'm going to openly share with you that I did lose a few dollars on AT&T, and literally only a few dollars, but a loss is a loss. So now, bring on the haters, I know. But in all seriousness, I'm not going to tell you to sell. I'm actually just here to say that I don't think it's worth a buy nor worth the hold. And analysts, on the other hand, perhaps feeling differently here with a forecasted price of $20.33 per share. That's over 44% worth of upside. But as for now, I mean, really, this stock is just trading in the red at $14.11. Not going for it whatsoever. I received $2.02 for, I think, holding like 2 or 3 shares worth of AT&T back when I held it. I had been selling off out of this position for quite some time, so I only got paid on what I did have, but AT&T has that dividend yield coming in at 7.87%. Now, before I go any further, investors, help me out here, because I'm pretty proud of the videos that I've been making rather recently and how they've actually been helping other investors out there. But I gotta admit, I can't do it alone, and YouTube only puts these videos in front of more investors if they get likes and subscribe. So if you've been getting value from these videos, please tap on that thumbs up button for me and help break this whole YouTube algorithm thing. With that, let's get back to it and jump to mid-August, where I had my real estate payday with 2 monthly paying REITs shelling out their dividends, with the first of which being Stag Industrial, ticker symbol STAG, which is a REIT that is strictly focused on industrial properties, warehouses to be more exact, and one that just continues to do very well, which I feel strongly about given our e-commerce future. Now, Stag's portfolio has amassed to 558 buildings in 41 states since its founding about a decade ago. Now, I think it has plenty more firepower in an economic turnaround, so just give it some time, which is why I also think analysts just continue to see more upside as well. Over 11.3% worth of it coming to a share price of $40.50 per share. But I'm not exactly a buyer as of late, just holding on to my 29 shares, which allowed me to collect $3.68 thanks to Stag's dividend yield coming in at 4.03%. Of course, our next REIT is every dividend investor's goldmine, Realty Income, ticker symbol O, which is a leading net lease solutions REIT within the industry with an ever-growing portfolio consisting of over 13,000 properties across all 50 states into the UK as well as Spain as well, with 1,300 plus clients to rent them all out to, which is where we're really getting a lot of reliability. Now, investors, as of late, this dividend gem has slid below $60 per share, coming in at $56 per share as of this video. So I will share, I have already begun to buy more shares to enjoy more dividends from this monthly paying dividend real estate king. As of this video, I have 104 shares, which allowed me to receive $26.59, thanks to that dividend yield of theirs coming in at 5.38%. And as for this next dividend stock, it's really one that doubles as a tech growth behemoth, and it's also my largest position. We have Apple, ticker symbol AAPL, which I don't think needs much of an introduction, but I will share with you that I'm all in when it comes to Apple, kind of like Buffett, and I remain excited about Apple's future. Now, would I buy it right now? No. You see, amidst all the tech excitement, Apple shot up over 43% year to date, whereas it's now trading above $178 a pop with a PE at 30. But when hopefully the market slides, I would love to snag more shares worth of Apple, with analysts forever remaining optimistic with another 16% worth of upside forecasted to a share price of $208.73. Now, I wouldn't be surprised if it hit that target price and then we'd get a classic Apple stock split. However, for now, I'm just going to enjoy the 127 shares, which allowed me to receive $30.63 thanks to Apple's dividend yield coming in at 0.53%. Now, last but not least, a toast to all you mocha choca latte lovers out there buying Starbucks coffee on the daily, because my last dividend check was really from all the so-called coffee house chains. And while yes, I always seem to be hating on Starbucks, I have to say that I do love the dividends from Starbucks for a company that only just continues to add to its 35,000 plus locations. I'm here to officially now share with you that it's pumpkin spice latte season, so get after it, my sugar addicts, because with every purchase of yours, that means dividends for me. As of this share price, it's at $95 per share, which is down from $114 per share, with upside now expected over 22% worth of it, coming up to a share price of $117.14 per share, which is looking good to me, but not so sure I'm going to be buying more Starbucks shares right now. I'm going to hold my 20 shares, which allowed me to receive $10.81 this go round, given their dividend yield at 2.18%. And this now all leads me to a monthly total of $80.81 during the month of August, with likely a couple more dividend paychecks to trickle in from settlement funds. But running with the chunk of change here, we can jump right into the dividend tracker. And as we input August's total, you can see that we did in fact come in above July, but didn't quite outdo the monthly from this time last year. Now, that's likely because I sold out of my AT&T position and I've been holding a lot of cash given our economic backdrop. But wait for the next quarterly paycheck coming in September. And in my opinion, all that really matters is I'm about to surpass last year's annual total, and I'm just increasing my average monthly returns. Now, investors, let me know just how much you brought in during the month of August with a comment down below, and be sure to get the next dividend stock idea video right here. But before you actually do, tap the thumbs up button, and of course, join me on this journey if you haven't done so already by subscribing.